Stacy Rasgon is Senior VP and Senior U.S. Semiconductor Analyst with Bernstein Research. Stacy, thanks for joining us today.
Good to be here. Thank you.
I know you don't follow Micron specifically, but the rest of the group, do you agree with Jim that they're taking their cue from that company right now?
I don't think they're taking their cue from that company, but is Micron a proxy? I mean, maybe a little bit. They have, wide exposure to many end markets that drive a lot of semis, obviously. I also think within semis, investors are just getting a little worried that like the cyclical call is getting a little long in the tooth, that maybe we're getting a little close to peak. And I do think that was a concern probably for Micron, although Micron had some other more company-specific issues too. They were talking about like costs going up next year, for example. So there were other things beyond just the broader environment. But there are some parallels for sure.
We said you are finding opportunities. Does that mean you don't think that we're going to see this pullback last much longer?
I mean, who knows? Right now, the overall fundamentals in terms of demand and everything still look really, really strong. And they've been strong all year as we come out of the pandemic.
Right.
One of the unknowns, though, is that in a period where there are shortages and constraints, which there are a lot of in the industry right now, a normal practice of customers is actually order more than they need when they can't get the parts. And so right now, we don't know how much of the current very strong demand is real and how much is not. And my guess is we won't actually find out that answer for a while. Overall, though, the semiconductors tend to trade like on what they call the second derivative. People look for changes in the rate of improvement or not. And if things are getting better, but at a slower rate, people start to worry that we're coming close to the peak. And I get that worry. We'll find out a little more like when we have earnings in a couple of weeks.
Yeah.
Now, within that, though, I do think that there are opportunities depending on what particular investors might be looking for. And we can talk about a few of those.
So, Stacy, the SOXX down about 1.75% right now. Tough day for chips. A lot of uncertainty when it comes to supply chain demand. You just mentioned maybe people are over ordering and they might not actually fulfill all those orders. So can you give us some stock picks for both sides of this? If you see demand continuing, especially in the auto sector where there's so much demand, what's your pick? And then on the other side, if you think some of this demand is, phantom demand, what company would you go for?
You bet. So if you're interested in auto, and by the way, I actually do think the auto semi recovery has some legs to it. I think at the end market level, the actual like automobile level, I think demand is still outpacing supply. I think that channel was already bone dry, and going forward, they'll probably have to actually hold more inventory. They used to run on what was called a just-in-time, which it probably isn't going to cut it anymore, so they'll have to hold more. I think auto can work, and NXP is the obvious choice. They've got 50% of their revenue in automotive and some other nice growth stories in the rest of the business. I think if you're looking for safety or some margin of safety, I actually kind of like Broadcom. So Broadcom recognized this situation quite a while ago. They actually put non-cancelable order requirements on their customers. Their semiconductor business is sold out for the rest of the year, so I don't really have to worry about that for a while. They also have a software business that brings up margins and lowers volatility. They'll deploy cash this year, either to buybacks or M&A. I think either of them are going to be good. They've got a good dividend yield, which offers more support. It's got the highest margins and highest free cash flow of anything in the industry, and it's the cheapest thing in my coverage. So, kind of a good return with a margin of safety. If you're worried, I think Broadcom's probably.
Shepard Smith here. Thanks for watching CNBC on YouTube.